Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions.
Today, we're diving into the world of personal finance, economics, and of course, the ever-fascinating world of markets. But before we get into all of that, let's talk crypto. Now, we all know that when it comes to cryptocurrencies, things can get pretty wild. But did you know that there are actually over 18,000 cryptocurrencies out there? That's right, a whopping 18,000. So here's a little challenge for you. How many of those cryptocurrencies do you know? Do you have a favorite? Maybe you're into the popular ones like Bitcoin or Ethereum, or maybe you've got your eye on some hidden gems. Speaking of crypto, let's take a quick look at what's been happening with the markets. While the world is busy trying to predict the future, the crypto market seems to be holding steady. Nothing too exciting happening there, except for one notable event. SEC Chair Gensler recently got grilled by Congress, and boy did that make some waves. It's always interesting to see the clash between regulators and the crypto world. So keep an eye on those markets, folks, and don't forget to expand your crypto knowledge beyond the big players. Who knows, you might just discover a hidden gem that takes the world by storm. Happy investing. So, the latest news is that home prices in the US have hit record high levels in July. It's quite surprising considering that usually high interest rates lead to lower prices. But experts are pointing out that the reason behind this phenomenon is the low inventory of homes available in the market. This marks the 6th consecutive month where prices have been on the rise. In July, prices went up by 0.6% compared to the previous month and 1% compared to the same month last year. According to Craig Lazzara, the managing director at S&P Dow Jones Indices, this continuous increase in prices has now completely wiped out any earlier declines, making July the new all-time high for the National Composite Index. For homeowners, this is fantastic news as it means their property values are increasing. However, for those looking to buy a home, it's not such great news. With prices consistently going up, it may be becoming more challenging for potential buyers to enter the market. Shifting gears to global news, it seems that London's real estate market is experiencing a recession. The percentage of empty space in the city has reached its highest level in the past 30 years. Additionally, we just received an update that Evergrande stock has crashed once again, with shares of the company being suspended as a result. And over in Europe, Poland continues to face economic challenges. According to a recent CNBC survey, it seems like the majority of investors are feeling a little bearish about the market in 2023. They believe that the bounce we saw earlier this year is actually just a bear rally. In fact, only 39% of investors think that we have entered a new bull market. At the start of the year, things were looking pretty good. The optimism was high. However, as this month rolled in, all the major indexes have taken a bit of a tumble. The S&P 500, for example, is now only up 11% since the beginning of the year, after losing 5% of its value in September. Not the best news for those hoping for a strong bull market. Looking ahead, about 41% of the respondents in the survey believe that we will see a recession in the middle of 2024. That's not too far away, and there are even 4% of investors who think that we're already in a recession. However, there is a small glimmer of hope, as only 14% of respondents are confident in a no recession scenario. Overall, it seems like there is some concern and uncertainty in the market. Investors are keeping a close eye on the future, hoping for positive outcomes but remaining cautious. Only time will tell what lies ahead for stocks in the coming years. Diversification is a key concept in personal finance that helps protect your investments from various risks. Essentially, it means not putting all your eggs in one basket. Instead, you spread your investments across different assets, geographic regions, and industries. This strategy reduces risk and safeguards your investments against factors like inflation and political risks. However, it's important to note that diversification doesn't fully protect against losses. It primarily mitigates unsystematic risk and doesn't shield you from systematic risk. When implementing a diversification strategy for your investments, there are a few things to consider. First, choose different asset classes like cash, bonds, stocks, and real estate. These options have varying levels of risk and returns, so mixing them can help you diversify effectively. Another approach is to invest in different industries. By spreading your investments across multiple industries, you can safeguard against potential losses in any one sector. For example, if you've invested solely in the entertainment industry, strikes could significantly impact your returns. However, by diversifying into industries like tech and banking, you can mitigate specific industry risks. Additionally, regularly rebalancing your portfolio is crucial. The market is dynamic, and some investments will gain value over time while others may decline. By monitoring your portfolio and making informed decisions regarding buying or selling investments, you can maximize your returns. Considering alternative investment options is another way to diversify your portfolio. Commodities such as oil and precious metals can be attractive short-term investments. Private debt and private equity are also options for investors looking for different avenues. Collectibles, such as wine and fine art, can offer high returns if approached wisely. Lastly, don't limit yourself to a single location. Diversifying geographically by investing in markets across different regions like North America, Europe, and Asia can provide added protection against economic recessions or uncertainties specific to one country. Remember, diversification is a powerful tool to help manage risk and increase the potential for successful investments in personal finance. Oh, Woody Allen always has a way with words, doesn't he? Today's personal finance quote comes from none other than the renowned filmmaker himself. Money is better than poverty, if only for financial reasons. Now that's a thought-provoking statement, isn't it? When it comes to personal finance, there's no denying that money plays a crucial role in our lives. It's not just about having the latest gadgets or dining at fancy restaurants. Having financial stability can bring peace of mind and open up opportunities that might otherwise be out of reach. But let's not forget that money isn't everything. There are plenty of folks out there who may have all the wealth in the world but still feel empty inside. True happiness and fulfillment come from a myriad of sources, such as meaningful relationships, personal growth, and pursuing our passions. So, while money may have its advantages, it shouldn't be the sole measure of success or happiness. It's all about finding the right balance and recognizing that financial well-being is just one piece of the puzzle. In the end, Woody Allen's quote reminds us that money can make a difference in our lives, but it's up to us to determine how we use it and what value we truly place on it.
In today's episode, we discuss the stagnant crypto market, record high home prices, investor sentiment on the market, the importance of diversification, and the financial benefits of money. Stay informed and make smart financial decisions. Thanks for tuning in to the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at morningdownload.com/subscribe.